Every trader asks me the same questions. What APIs and trading tools actually work? You can waste months of your life on the wrong platform before realizing that you've built your entire automated or systematic trading strategy on a foundation that can't scale. In this episode, I'm going to break down every API I've used across futures, stocks, and Forex, the good, the bad, and the ones that will save you a lot of headaches. Plus, Pedma will reveal why crypto APIs are light years ahead of traditional markets and the platforms you should be using if you want to automate crypto strategies. Let's get straight into this, which are going to be all the APIs and trading tools that I've used in systematic trading or automated trading. Now, a lot of these have been personally game changers for me, and there are actually pros and cons of each one. So what I'm going to do is I'm going to cover primarily all the stock ones, and then Pedma is going to cover all of the crypto ones. Do you want me to start, Pedma, or do you want to go first?
Yeah, please.
Okay, sure. So I'm going to start off the main one I use, which is NinjaTrader 8. Now, this is primarily for futures. If you don't know and you haven't watched any other videos, I run 10 automated strategies in the futures markets. So that's like NQ, ES, YM, etc. Now, NinjaTrader 8 is the primary place that I store all of the algos. There's a couple big reasons for this. Is one, I think this is the main reason I've consistently used it, is you only need one code for backtesting the strategy and for automating the strategy. Now, a lot of the other times when you're using something maybe on equities, you'll often need a historical code, so code to backtest it, and then you'll need a new code for the automation and connecting to the broker, etc. The reason for that is most of the time brokerages don't have the best historical data, so most of the time you'll have to fetch it through, let's say, Polygon. We'll touch on this in just a second, and you'll need two separate codes. Whereas with NinjaTrader 8, because it's all built within a platform, I just have to work on my own strategy code that is developed in C#. And then I can backtest it, I can optimize it, I can do walk forward testing, I can do Monte Carlos, etc. Now, it isn't perfect by all means. Some of the performance metrics it does is a bit confusing. So sometimes I just like to export out all the trades into a CSV, which is just like an Excel file, and then I do my own calculations from there, whether that be on Python or just Excel. But that's primarily the main reason. I would also say it's a great one because I probably Pedmo can touch on this in just a second. Is that sometimes you'll have a backtesting code and then you'll move that over to live execution. So you have to write out a new live execution code. And sometimes they won't fully match the execution times of things. And that can be a really big headache to fix because sometimes it can be very minute differences that are causing that difference in execution, for example. Whereas in NinjaTrader, I'll instantly know if it's broken because I'll be able to see it on the backtest, and I'll also be able to see it on just like a live chart using the exact same code. So I don't have to waste time trying to debug two different codes and see if there was a mistake on the backtesting or if there was a mistake on the live execution. I'm assuming you've come into like issues like that.
Yeah, you want always to have those two matching, right? So,
Yeah.
uh, yeah, it's always important, an important feature.
And then probably the other pros I would have is it's got a pretty good, strong community and educational resources. I think this is one thing that's often overlooked when you're trying to pick either a platform or an API you want to use. Using an obscure and unique API, even if it looks a bit better, can often be a really huge kind of time waste for the reason being that there's not many other people that have used it before you, and there's not many resources out there for you to look into. Now, no matter how good of a coder you are, you're probably going to learn from others. And especially with using APIs and especially when trading, ideally you want to use something that has resources out there like YouTube videos, blogs, etc. And NinjaTrader 8 has a pretty good archive. Now, it's a bit outdated here and there, but for the most part, you do get a lot of info and also documentation. The
Mm.
cons, I would say, is steeper learning curve, and that's primarily just because it's C sharp. Not many people code in C sharp nowadays. It's a bit of a not outdated. It's still a very good language, but just not many. Everyone's coming in with Python, for example. So it is a bit more obscure, but it is personally worth it in my opinion if you're going for futures. Now, if you're trying to trade stocks, this kind of leads me over to the main options for stocks, which is DAS, interactive brokers. There are a couple other solutions like Alpaca, I believe can work quite well, but the main ones I'm kind of experienced with is normally DAS and interactive brokers, and also Polygon, but that's primarily for historical data. So let's start with the worst. So DAS is by far the worst platform I've ever had to use. It's just I don't know how to describe it very well until someone uses it. It's very advanced, which is great. You can do a lot of cool things in DAS, 100%. But it is an older API. It's barely been updated, at least the last time I've checked. And also, it's missing a lot of newer practices. And then I think the key thing here is that it's got very limited documentation. Now, I don't know if they still have this in place, but when I was primarily using DAS, they have an NDA that you have to sign when you get access to the API. Now, are they going to pursue you if you post something online about DAS? I don't know. I personally haven't tried, but that does mean that a lot of developers have been, a bit cautious about putting any online help out, any online templates, all those sort of things. So when you're working with DAS, it is pure coding, in my opinion. It is, you write a piece of code, you test it, it doesn't work, you go back, you try and figure out why it's not working, you test it again, go back. There is no like looking up, hey, how to do this, or has someone previously wrote this code. Now you can find other traders that have used it, and they can definitely help you. But for the most part, it is a lot of just pure coding, and also, especially with now everyone using AI, at least from what I've checked, maybe they'll get better in the future about it. They have no idea how to work with DAS. And that makes sense because there's not much online resources for it to have been trained on. Whereas if you ask it to do something, let's say with interactive brokers, it may not be perfect, but it at least will get maybe a good-ish start in interactive brokers, especially if you feed in like documentation. DAS, that's never going to happen. So I'll just leave it as that. There's not many pros to it, but it is really the only platform you'll be able to use if you want to do shorting of small cap stocks. And that's why there's a lot of people that still use it. Now, next, I would say that goes over to interactive brokers. Interactive brokers, I'd compare it as like the complete opposite to DAS, at least. Very approachable, a lot of documentation, supports multiple languages as well. I think DAS does as well, but that's just one nice thing it does do. You have access also to a lot of different asset classes. I believe you can do options, futures, and obviously stocks on interactive brokers. So it's a nice way you can do all three if you want to. And then there's just tons of resources, which I think is the key big pro. There's a great guy on YouTube. What's his name? I think it's Jerry. I'll see if I'll leave his link in the description if I remember his name, but it's Jerry something. And he does great videos about interactive brokers. So there's a lot to be learned online through there. Now, is it still, a super smooth transition and you're just going to get an algo working straight away? No, I don't think that's really true of any platform, but it is a really good approachable one and maybe a good starter one to use if you're getting the first time into stock automation. I'd say interactive brokers is pretty good for that.
Yeah. And if I may add,
Sure.
I've done some work, as you know, with interactive brokers. It's like I came from crypto, and we'll get into it in a bit. And it's stuff is very intuitive, and you can access data much faster and send orders and stuff like that. But in interactive brokers, I do think it's like you said, like a very approachable platform. It's just clunky, in many times you have to really dig into the documentation because AI doesn't get there very well yet, and it has to be you understanding the context of what you're trying to achieve. But in all, like I really think interactive brokers is a very good solution.
I think you summed that up perfectly. I think this will actually be a bit of an overview point I want to say is that for most things in equities, they are very old fashioned for the most part. There isn't any breaking new API sort of things that have been developed for equities, at least not in the retail side of things. So a lot of it is going to be using older platforms with a bit of older documentation. Maybe they've been a bit updated, but compared to crypto, as what you're kind of saying, especially with my small experience with crypto as well, everything's new, everything's lightning fast, everything's very open. It's a lot easier to use for the most part compared to equities as a whole. And then I'll finish off with two more, which I think are the key two other ones I use, which is going to be Polygon. Now, Polygon is pretty much my go-to for any equities historical data. I wouldn't say it's my go-to for options data all the time. Depends what it is. Options data can get very expensive very fast. So I think for a good, reasonable priced approach, Polygon is great for it. I think if you're going to go for something very high end, then maybe Feta data can be a good option if you're doing a lot of options data streaming. But for the most part, I think you can get by with Polygon for options. But for equities, personally, I haven't seen anything else as good as Polygon. Now, a couple of the reasons can be the pricing structure. They've got pretty much unlimited API calls on all the paid plans, which is really nice. They have a really good amount of data that they'll give you. I think it's like 5 years for $29 a month, which in my opinion is a very good deal. And then lastly, I would say is their endpoints, like the aggregate daily bars, minute bars. Those are very useful endpoints to have. And then even they've got the full market snapshot, which is a great endpoint if you're trying to get across all tickers and filter based on some price or something like that. So those sort of things I think are the key ones, and especially when you're working with equities. If you're doing something a bit more advanced, which is what I'm saying is when you're looking across all tickers or you're looking across a certain subset of tickers, but you have a scanning filter, Polygon is normally a better choice than something else, maybe like Yahoo Finance. You're not going to be able to do that with Yahoo Finance, especially not with intraday data or things like that. As a small touch on Yahoo Finance, great for beginners. I'd say it's probably the most fun thing to mess around with. Daily bar data is okay. It's maybe like 70, 80%, I would say decent. But if you're getting into systematic or maybe automated trading in the future, I'd say hook up Claude or ChatGPT and work on some projects with Yahoo Finance is a great starting place. You probably won't find any like alpha or edge with it, but it is a really good learning place to get some projects done. Maybe do your first backtest over daily bars, things like that. And yeah, I think that's primarily all of them. If I had to rank them for futures, NinjaTrader 8 definitely at the top. For equities, probably Interactive Brokers over DAS by pretty much all the time. For historical data and equities, Polygon is a great pick. Yahoo Finance is great if you're just getting started, or maybe you're just looking at daily data. And then, for Forex, probably is the last one I'll mention is MetaTrader 4 or 5. Both are very decent, but they are what Penma kind of said, very clunky, bit out of date. But the coding language is actually quite clean, which I quite like. They use like an MQL code, which is very nice. And they have the same process as NinjaTrader 8, where it's within a platform. So it's the same code for backtesting and automation. So if you are doing something in Forex, probably those are very good picks. And yeah, okay, I'll let you go over to crypto now.
Yeah. Damn. After that, that explanation on each of the platforms, I'll try my best on mine. So in crypto, the beautiful thing about, or the intuitive thing about crypto is that everything is very smooth. Like you can get data, you can send orders pretty much. I would say if you have good experience in 10 minutes, you take data and you can start sending orders through an API quite fast. Everything has a lot of documentation. It's very didactic. Like you can, it's very smooth. For example, you have a platform. I think you can call it a platform. If I'm getting the technical terms wrong, it's because I'm not an engineer. I just code to trade. So you have a platform that is CCXT, and that platform aggregates all the APIs from all the existing exchanges, and you can basically trade via their platform through all of the exchanges without having to change like lines of code in the back end of your orders. So for example, you can send orders to Binance or to Bybit or to OKX, whatever all the exchanges that exist, through an equal line of code or an equal amount of code through one centralized platform, which is quite cool. So like you don't even have to change the codes. For example, if you wanted to trade on Interactive Brokers and on DAS at the same time, imagine you can do that, but instead of having to rebuild your entire backend, you can do it via one code, and that's quite good.
I will say, when you first mentioned that to me, I was, I don't know, maybe a year ago now or whatever, that was the biggest thing that really drew me over to crypto, because I was like, that's just incredible that you can do that. I don't think that's ever really going to be possible in equities because there's always so much regulation around it. But yeah, it is an amazing feature.
Yeah, it's quite good, and you have like they are very good at updating exchanges. So you have like, I don't know, all of them, like hundreds of exchanges or more that you can connect via one line of code and start sending orders through all of them. It's quite spectacular, to be honest, and so that allows crypto to be very dynamic in that aspect. If I had to rank them, like the most I've worked with has been Binance API, which is quite fast. You can take a lot of data, not to get throttled by them. You have a lot of liquidity. You have a lot of maturity in terms of everything that you can use, because there's a lot of documentation. There's a lot of examples online, and it's pretty smooth to use. You have Bybit as well, another exchange that is quite good. It's the same as Binance. You can get all the data that you need. It's hard to get throttled on your requests because they allow a lot of them at the same time. You have web sockets that you can get live data always going into your backend, and you don't need to monitor that all the time. The API is quite robust. You have Hyperliquid, which we talked a lot about. I've been only working with their API for a short period of time, but from what I can tell, it's quite smooth to work as well. But it requires a bit more nuance, because once you start going into from centralized exchanges, for example, on Binance or Bybit, and you start using decentralized exchanges, you're starting to have to deal with wallets. And usually, for example, Hyperliquid asks you to have a sub account so that it doesn't control your main account, and to send orders through. And so there's a few wrinkles there that are different. But in general, it's quite a smooth and very direct way to access their API. In terms of data, where you can get data, I use CoinGecko API. You have like, I don't know, like 14,000, if I'm not mistaken, assets that you can take data from. And you have those that have been delisted, those that have gone to zero. You have a bunch of coins there. And I use them basically because, for example, if you are trading on Binance alone or Bybit or Hyperliquid, there's assets that you don't have access to because they delist them or whatever. So you want to have a full picture of all the assets that existed before and that exists now. And you can get market cap data, you can get FTV data. So there's a bunch of things that I like to use CoinGecko API. And if you have the funds and you want to have a very granular data, you have another API that's called TARDIS. TARDIS is more expensive, but they have tick by tick historical order book data, funding data for more than 40 venues. And all their data is also, how can I say, without survivorship bias. So they store all the data from, for example, you want to know how it was to trade on Binance in 2021, what kind of assets were there. They store everything there. So it's a very complete platform as well, but it's more expensive, as it is to be expected. And yeah, that's basically it. Any API that you touch on crypto is usually very intuitive and smooth, and that's what I like about crypto.
Have you ever used any platforms for crypto? Like, I personally haven't looked into it much, but I just was wondering.
Platforms?
Yeah, like Quant Connect, things like that.
No, I've never used. Everything I've built has been custom.
Yeah, I think this is actually an important thing that we should touch upon. At least for the most part, maybe we've mentioned this in previous podcasts, but custom is normally the way to go, I'd say, for most people. Most of the time, I see people try and use the platform because they want to get to an end product a bit faster, but it will normally just bite them in the ass, maybe like three months later, etc. Whenever they try to expand it, or there's maybe a certain limitation with it, or something you didn't know about how they were doing either execution or about their backtesting. Like I think one that I remember a while ago. I can't remember what platform it is. I don't want to give them any hate or anything, but I think they were working on transaction costs as like a percentage of total account value and things like that, instead of based on like an actual transaction cost. And people didn't obviously realize that until later, until someone really went into the documentation and noticed. And that can really make a big difference on your backtest. You may be operating strategies that you think is really profitable, but it's because this underlying assumption is actually a kind of a poor assumption, and that's why it looks great. So for the most part, I think both of us, we try and build custom. Now, that's a bit hypocritical of me because obviously I use NinjaTrader 8, which isn't custom. But the only reason I like NinjaTrader 8 is I understand pretty much all of their work. And also, like I mentioned before, some of the performance metrics aren't amazing. So I do just export out the trades and then I can do my own performance metrics, Python, for example, with it. But still, for the actual underlying execution and things like that, that all has been working perfectly for me, at least on NinjaTrader 8. But anything in equities or crypto, I think just going straight through the API is definitely worthwhile.
Yeah, yeah, I've heard some professional people in the industry saying that there are solutions that are coming out that are really, really good and approaching like institutional grade. And so I don't want to say that I would never use, but personally, I prefer to be able to, to have the flexibility to code things that I know that are more intuitive once you trade. And it's really hard to get that granularity if you use like standard platforms that are built for retail and for public. I don't really know when I don't. For example, if you want, I was working on this project on refactoring my entire backend to support like continuous trend forecast, continuous like signals. and you have to do regular daily rebalancing based on thresholds. And it's not as simple, like it's a very, very custom solution, and it's something that I've built custom for myself, and it's on my backend. And I think with AI tools, it facilitates that development because it shortens so much the development time, that I think that the safety that you get from it, or the control you get from it, it far outweighs the cost that you will have to do to develop it. So I prefer to keep everything in house for now, but maybe in the future, if there's a better solution than my own infrastructure, I would look into it for sure.
No, I think that's definitely a fair approach. If something came out that was amazing, 100%. I think we're all very adaptable. I just think for most people, custom is probably the better way, at least for now.
Yeah.
One kind of more developer question I wanted to ask. I know you're not as much of an engineer for it, or at least that you say. Personally, I think you're very good. But do you like use SQL or CSVs for like data storage, for like database storage and things like that?
I use SQL when it is for databases and tracking my trades and storing my trades, storing data and stuff like that. When I use them, like for those purposes. But I use CSV only when I need to, like, for example, I need to reconcile values. For example, I want to see why should I have this cash on a specific day, or if they reconcile with my positions, with my equity at the time, with the cost I've paid, stuff like that. I want to have a CSV file because I want to be able to go to that CSV and check if everything is being calculated correctly. So the CSV files are more reconciliation tools, if that makes sense. I don't know if I explained myself very well there.
No, I think I understand. The reason I asked that question is just because I think I have two perspectives on it, and it's very strange now because obviously we've been trading for quite a while, and now we've seen like AI come into development decently. For the most part, I think I always would have recommended just stick with CSVs for most of trading, like, at least if you're earlier into developing trading stuff or anything like that. Just because they're so much easier to use, people are a bit more intuitive about using Excel if they want to do modifications to it, etc. But nowadays, I think you probably like if you got a decent idea of how SQL works, etc. It can be a decent solution, but I think it depends. In my opinion, for most of my stuff, I don't think you ever really have large enough data where it makes sense to have a whole SQL database unless you are keeping your own like 20 years, 10 years of bloody like minute data or something. Then
Yeah.
100%, you're not going to be able to run that on CSV. But for more smaller databases, I think CSV for the most part is always pretty decent to work
Yeah.
with.
I use, yeah, exactly. I use mostly SQL for stuff that I need to store for a very long time and I don't need to touch, like data, like you said, and my own trade data. So things that I don't need to. If I want, I just download a CSV file from it or something, and then I use it. But for other stuff, for the tracking, for the backtest and stuff like that, I use CSVs because I have to work with that data.
Fair. I guess that's